And so this is all since the GFC, isn't it? Most of this, or a lot of this, or might have been in existence, but it's really wound up a lot, hasn't it?
I think it has. I think the legislation was coming. That's been coming for quite a few years to regulate the industry, and that's great. That's fantastic, a great positive step. Even though it means more work, that's going to be good because it'll just get rid of
all
the rotten eggs.
Yeah.
That'll be great. I think the funding, it was an issue through GFC. We couldn't understand why banks wouldn't do this deal like they've always done this deal. But again, they were probably had however many applications they had that day, and they said, okay, we're going to do 50% of them, so we'll pick the best 50%. And they did those.
Yeah.
And that's why, again, it is just more and more critical that people get their finances in order. We see people every day of the week, 10, 15 credit cards, just totally out of control, totally out of control. We've had people with 200,000 or 300,000 in credit card debt. Now that's just ridiculous. And we shake our head and we try and help them, but people have to look after their own finances. They've got to get on top of it.
Yeah. So companies like My Budget,
yes,
are they complementary to you?
Yes, they are.
So they'll help people sort out their funding?
Yes.
You will obviously give some direction by the sounds?
Yes.
Yep.
Yes.
Okay.
Yes.
Now, very specifically about what you're seeing happening in Adelaide's market. You own how many properties, Wendy?
Over 60.
60 properties. That's
well, we're buying them, Anthony. I have a huge debt, and I am my own biggest loan customer. So.
But that's awesome.
It
so
is.
you're living the dream.
Yes.
Yep.
Yes.
Okay.
Yes.
Talk to me about what's happening with the market from your point of view. So you're seeing buyers, you're seeing loans get knocked back, loans being approved. Actually, before we get into that, how many loans would get knocked back? So if you do 100 applications, how many would not?
Probably only 2 or 3.
So 2%?
It's not as bad as it was.
And would you tell someone up front if they've got no chance?
Yeah, exactly. We don't get paid for declinals.
Right.
We don't get paid.
So
We qualify the people. That's our job. We qualify the people. The bank doesn't want to see a loan that it just has no way of working. So we actually qualify them and work out which lenders will lend them.
Do you counsel the people that to how to get their house in order?
Yes, definitely.
So they might come back in 12 months' time?
Exactly, yeah.
Right.
Particularly first home buyers, if they haven't got enough deposit. With the stamp duty that we still have in South Australia, it's pretty hard for them to get a deposit now, and some of the banks are only doing 90% rather than 95%, although that's coming back a little bit. So lending is easing up. The banks are getting more of an appetite for lending money at the moment. So that's good. As far as the market goes, the lower end I think is fantastic. A lot of my clients are just small-time investors getting into the investment property for the first time. And I've got so many pre-approvals and properties up to 250, 300, small little units.
Right,
I love that type of property. We have access to RP data, so I'm looking for them for property. I've got alerts on my RP data telling me if something comes on the market in those areas. I'm letting agents know in the areas they're looking. And that's working really well because they don't, it costs up to just under $200 a week to maintain a property for about $250,000 with current interest rates and current rentals. The rentals are great because the demand is there.
It's high.
For rental property, so the returns are pretty good, around 5%, which is great, and the vacancy rate's really low. So I'm just trying to encourage people by getting in at the lower end. So that end's going okay. We've had people probably $500,000-$600,000 properties that aren't selling as quickly, and people doing bridging and they're not selling for as much. So very careful when recommending bridging finance. If
do they still call it bridging finance?
It's go between. We call it bridging still, relocation loan. The banks have a different name for the product. Some of the banks are a lot stricter with that now, and some aren't. So again, if you need bridging finance, we know who's got the best deals. And I think, the expectations of the vendors have to be realistic if they're wanting to sell.
Do you do anything much in the really top end?
Not over $1 million, we don't. No, we don't see that top end very much. No, we probably, if someone buys a house for sort of 1.2 million, it used to be amazing. Now it's sort of like, that's pretty normal. That's right, seeing how prices have gone up in the last 13 years.
So in your world, Wendy, what would a normal person with normal double income, maybe a couple of kids, how much would they borrow? What's a normal mum and dad?
It's about 5 times your gross income.
5 times your gross?
5 times your gross that you can borrow. Right. If you then have a rental property, it goes up more than that. And then if you have couple of personal loans, it goes down, but it's roughly around about 5% at the moment, 5 to 5.5% at times. Sorry. Sorry.
So, what would be, someone walks in and you said, of the 100 loans we've written in our office this month, you know, most of them are going to be about how many dollars?
Most of them would be 300,000 to 400,000 loan.
And they'd be buying a house worth what?
400 to 450.
So they've got about 100 to 200,000.
A lot of them have got big deposits. A lot
Yep.
of people coming from overseas are bringing money over and investing.
Where from? UK? Where
UK, mainly UK.
Mainly UK.
Yeah. Some from Europe. But look, we do top-ups as well, 10,000 top-up. You know, there's no cost to the client for doing that.
Yep.
And that's, you know, the client for life attitude that we have. So it varies. Our average loan size over those 100 loans is about 250,000. When I started 13 years ago, it was 105,000.
Okay, so that gives us a bit of a feel. Apartment market, how's that going?
A bit tough. A bit tough.
Yeah.
The banks are looking at them a lot closer, and resales, and also the mortgage insurers are taking a pretty dim view of some in the city. So a bit tough to get those through.
Now you haven't mentioned mortgage insurers. At what level of loan to equity does the mortgage insurance kick in?
It kicks in over 80%.
So from 80% on?
Yeah, it kicks in.
Right.
Yeah.
And what does it cost for mortgage insurance?
It varies. It goes up. On a 95% loan, it's over 3% at the moment. It's
and that's
a lot.
Built in?
Some of the banks will add that onto the loan.
Yeah.
Some of the banks, most of the banks cap it at 95% plus mortgage insurance, but capped at 97%. But for example, Bank West don't. They will lend you the mortgage insurance on top of the 95%, and it can be 98.5%.
Right. Okay.
In some cases, the mortgage insurance premiums have gone up.
Right.
Definitely over the last 12, 13 years that I've been dealing with mortgages.
And Wendy, the nasty stuff, you read a lot of headlines, bubble burst, all that sort of stuff. Are you seeing stress? Because people would come to you, wouldn't they, and say, I'm in trouble? Are you seeing much of that?
We do see that. A lot of them we can help by consolidating. A bit of it's to do with the interest rates, but some of it's to do with loss of job and not being able to keep the credit cards paid off each month. And then when they get back on top of it, they'll come in and try and consolidate those higher interest rate debts into the home loan. I haven't really, in the last month, I have told one person that they really need to sell their house.
Right, okay.
And they came to me looking for a miracle, and there just wasn't one that I could do.
Yeah.
And I...
Why have you won, Wendy?